Global markets were volatile as we've seen a lot of shifts in stocks, ups and downs, and that's due to the Trump-Venezuela situation. And that caused us to see a lot of fund outflows from stocks into bonds and gold. So let's recap what happened the previous week and see what we're expecting for the upcoming one. Alright guys, usually this is the part where I just jump into the screen and tell you about things happened in the past week and the upcoming week. Now we're gonna do a different approach. You're gonna see it in a second. If you like this approach, aka the new one, let us know in the comment section below. If you don't like it, say that the previous workflow was better for you, which is basically explaining things on the screen, and we'll redo that again. So let's kick into something new. So looking at NASDAQ, as we had anticipated in the previous week, perfect movement, retracement to the resistance. That's about NASDAQ. Looking at Bitcoin, we did anticipate, actually I was telling you, there is a lot of bullish sentiment on Bitcoin, even though it was consolidating. That's exactly the case. It moved to resistance. And looking at gold, so it was ironically, as I stated, there was this Superman pattern as I highlighted in the past week, and there could be multiple things that to happen with gold. Could either go up or down, and I highlighted to you guys, wait for a break to either sides before trading it, because it's just gonna cause you to blow your account most likely. And yeah, so what happened with gold is a break to the upside, of course, after people getting or panicking, let's say. It's ironic that some things actually flourish when people panic. All right, that's about what happened in the previous week. Let's start analyzing the upcoming one. All right, guys, looking at gold, same chart, nothing really has changed. As you can see, it's the same chart. That's how trading works. Okay, so we can see that after that breakout, gold has formed for us a bull flag, perfect retracement to the support with a great confirmation to enter a long trade. And I personally think that gold will break above its all-time highs soon enough. All right, so that's about gold. About this slight retracement, it is possible, not very likely, because as we can see, it has barely broken above this inner resistance, but it's still on the all-time resistance, and we can see some bullish sentiment about it. So there is a small possibility that we might see a retracement. Of course, it goes on a retracement to this smaller bullish pennant on a lower time frame. You want to get a confirmation before another long entry. And yeah, of course, risk management is king. We're bullish on gold for the upcoming week and possibly fortnight. We'll see how that goes. So that's about gold. Let's go into the next asset. All right, looking at NASDAQ, yes, it did perform as we had anticipated in the previous week. However, there is a very little possibility for a retracement here. What is more likely to happen? We can clearly see that NASDAQ is forming for us this ascending triangle, which is probably going to cause a decent breakout to the upside and getting an all new high when it comes to the pricing of NASDAQ. So is it going to retrace? It's more not likely, because we can see a very decent strong bullish sentiment from that support moving to the upwards and a very small doji at resistance itself. So I think it is more likely to break above. We might see a very small retracement before the breakout happens. Either ways, whether you wait for a retracement or you enter at this stage, you have to put a stop loss below this low. Either ways, making a more or a bigger of a stop loss wouldn't really be optimal in my opinion, because either ways, if market breaks below this trend line, it will be a whole different scenario to markets rather than what's already doing. So, of course, not a financial advice. It is a personal opinion, you could say. And most of the charts actually are a group of Xylostar team opinion. But what I say is basically my opinion. So you guys, as you know, keep on to that in mind. And that's about NASDAQ. Let's go into another asset. All right, EURUSD is actually pretty interesting. Now, aside from things being a bit more volatile in the markets, Euro has actually found weakness. That's when it comes to fundamental reasons. But when it comes to technicals, I did highlight for you guys, even though Star team was anticipating a retracement to the upside, I did highlight that even though we found strong bullish movement here, but that was because of the weekend, or basically markets closing, and the support zone here. And I did highlight that there is strong bearish sentiment on Euro USD, and markets might attempt to go fill this fair value gap, and this is exactly what happened. Came down and then continued to this strong support. So if you had listened, yeah, it would have been a good trade, just as most of the time I give you guys good trades on Euro USD and pretty much every other asset that we analyze. And I do tell you, if you want to know more about a certain asset, just put it down in the comment section. But most of the times, nobody really is interested to know more about markets rather than what we are already, or alongside what we are already publishing. So that's about there. Now from Euro USD, we can see there's a great deal of, let's say, buyers standing at this support. So from here, we can anticipate a retracement, right? Making this trend perfectly flowing in a normal state before another attempt to break this support, which might not happen, but let's not predict 6 months to come. We're speaking about a week at a time. So that's about Euro USD. Let's go into another asset. All right, looking at Bitcoin, of course, been consolidating. Been telling you guys for quite some time, there is a good or a little bit more of a bullish sentiment on Bitcoin due to a lot of reasons I'm looking in the background, not necessarily sharing with you everything, guys, for time and also complicity, if that's a word. All right, so what we can see is Bitcoin is forming for us this ascending triangle pattern. So we might see Bitcoin fall into this trend line once more before another attempt to break above the resistance. To what I see it, it's consolidating, and to what I am experienced with Bitcoin, that it loves liquidity, we might see some later time, we might see a big candle that crashes and liquidates everything before it goes up, or we might not see that, but this is very possible. What I'm trying to say, guys, even if you want to go for a long position on Bitcoin for a longer period of time or midterm, you need to consider a probability of whoever is playing with Bitcoin whales to make that candle, because I did anticipate once a huge crash, even though there was nothing to happen technical wise. I anticipated it, and then that was, I think, last October. If you go and watch the videos, yes, it was last October. Even honestly, at that day itself and crash, I was super busy, didn't even look at Bitcoin, and some of my students came to me and told me about, oh, market is exactly what you said yesterday. It was yesterday itself. So yeah, sometimes I actually did not even know what were they talking about until they explained it, because they just came complimenting. All right, so yeah, that's very possible. So if you want to go for a long term before that liquidation or at support here, make sure you have a good risk management and a considerable stop loss for market, even if it gets a little bit volatile, to go for. And this candle is basically presumed in size, not necessarily that's how long I'm expecting to go. But we have actually a lot of liquidity under these lows and possibly also these lows. So yeah, these lows here and also these lows. So we might see candle trying to take both of them, maybe one of them, maybe none of them, if markets were volatile enough for Bitcoin to be pushed to the upwards. Why am I giving a lot of information about Bitcoin? Because I do like Bitcoin and I do believe in the possibilities it can bring to the table for investors, speaking about 5 years to 10 years from now. Yeah, that's about Bitcoin. Let's go into another asset. All right, Nifty 50. Well, guess who's back? That's what Slim Shady used to say, but I'm not gonna say that. I'm gonna say, guess what happened? Yes, we as a team had been anticipating that Nifty 50 will break above its all-time highest for about 2 months from now. right? Well, we did anticipate this breakout. Was this 2 months? Yeah, we did anticipate this breakout actually. All this movement, and this movement also was easily anticipated. This movement also was anticipated easily. But I did highlight for you guys, technically, Nifty 50 last week showed weakness, a lot of weakness actually, when it comes to bearish sentiment, well, aka strong bearish sentiment. Weakness as in bullish sentiment. And why weakness? Because the trend is going up, and we can see that a trend is smoothly going up between its two brackets. However, right, market has touched the lower brackets multiple times without being able to break actually above this inner trend, which is also considered as an ascending channel. And the maximum it did reach out to before falling to the trend line is this all-time resistance. And I did highlight that even if you want to go for a long position to anticipate a break above all-time highs, do not put your stop loss further than the previous low or maximally below the trend line, because there's a very huge possible liquidation to come. And this is exactly what I had highlighted in the previous week, and also exactly what happened, guys. We can see clearly that market fell and took liquidity from these lows here of this ascending channel, or a trend on a smaller time frame, you call it as you wish, and came down to the fair value gap and closed the doji. Now, after a crash, a lot of investors from the Indian market, or probably international investors, will see this as an opportunity to hop on a discounted price in Nifty 50, and counting on that, also technically, we should somehow see this retracement to the inner resistance before an attempt to break above that low, or a possible actually breaking below that support, reaching to a stronger support, making Nifty 50 looking somewhat as if it was consolidating on a longer period of time. Right, so a lot of interesting things happened in the past week. A lot are to happen, maybe, who knows, because I'm not the fundamental guy. And interesting things always come as in gossiping, news, reports. I'll leave that to my fellow mate actually in London, Mr. Amedian, to speak about the fundamentals. It's always good to see you on the screen, Mr. Amedian, and Mike goes to you.
Thank you, Samer, for sharing your insightful and deep analysis on technical side. Here is Amir Amidian, Master of Finance student in UK and also financial analyst at Xylostar. Last week, financial markets faced volatility as Donald Trump crossed another international law by invading Venezuela and capturing the president of the country. Let's have a look.
Welcome back, everyone. Another weekly market update by Xylostar. Let's see what happened to the financial markets last week. I want to start with the United States. In the United States, US manufacturing remained in contraction in December, with the ISM manufacturing PMI falling to 47.9, the lowest level of 2025, as production and inventories weakened despite slight improvements in new orders and backlog. While demand indicators are still contracting, stabilizing prices, slower job losses, and low customer inventories suggest early but fragile signs of potential recovery. On the other hand, US services activity strengthened in December, with the ISM services PMI rising to 54.4, its highest level since 2025, supported by solid gains in business activity, new orders, and the return to employment growth. Despite easing price pressures, a contracting backlog of orders, and a still low 12-month average indicate that expansion remains moderate rather than robust. US consumer sentiment rose for a second month to its highest level since the September of 2025, but remains well below the last year, as high prices and the labor market concerns persist. Inflation expectations, one of the most vital chapters of this indicator, stayed elevated, with year-ahead inflation at 4.2% and long-run expectations edging up to 3.4%. Let's also track the labor market in the United States. The NFP, one of the most highlighted employment gauges by the Federal Reserve, released lower than estimates last week. The change in total non-farm payroll employment for October and November as well revised down by 76,000 in total, which illustrated a weaker labor market. Both total non-farm payroll employment and the unemployment rate changed little in December by 50,000 and 4.4% respectively. Initial jobless claims, one of the most leading indicators for tracking the labor market in the United States, rose slightly to 2,800 in early January, while the 4-week moving average fell to its lowest level since the April of 2024, signaling continued labor market stability. Worth mentioning, the insured unemployment rate held steady at 1.2%, though continuing claims increased, suggesting mild softening without a clear deterioration. From the geopolitical side, last week was absolutely volatile as the US launched a bold operation in Venezuela, capturing the President Maduro, sparking global outrage and heightening regional instability. The attack fueled uncertainty over the Venezuela oil exports, rattling energy markets, and escalating geopolitical tensions in Latin America. Let's have a look to the upcoming week. For the next week, the main concentration of the market participants will be on the United States and the United Kingdom, as we are going to receive the latest updates about the inflation in the United States by getting the CPI and PPI, and also the other one is the retail sales number. Retail sales is showing the strength of the US consumers, which is the best one to track whether we are in the tough situation or let's say tough atmospheres in the United States or not. And also eventually at the end of the week, we are going to receive the GDP numbers on the monthly basis and annually for the Great British Pound on Thursday, 15th of January. Worth mentioning, new home sales and also ADP numbers plus the initial jobless claims will be also released as well. Stay tuned with Xylostar. See you next week.
Thank you, Mr. Samer and Mr. Amidian. Thank you guys for watching. Stay tuned with Xylostar. Don't forget to like, share and subscribe.